Hey, welcome to the Lock in Your Success Options Trading for Income Weekly Update for December 22nd, 2014. Before we get going, we would like to remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please be aware that the risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades. And also, please note that we are using computer-simulated performance results and trades in our presentation, and although they're believed to be as accurately represented as possible, there may be times when they vary from actual results. If you're watching this on YouTube or some other venue, come on over to our website, check out our programs, M3 Bearish Butterfly ROCK, M21 and Group Coaching and Trading Triangle programs. Join our mailing list, get your free report, 7 secrets to become a successful trader. Sign up for this free weekly webinar. And of course, as always, stay tuned for our programs that are currently under development. All right, let's take a look at what's going on in the markets. So last week, we were sitting here at a more minor support level, and I was thinking that we'd probably back down. It was pretty likely we'd come down to something that's a little more significant and bounce, which we did. What I didn't expect is I didn't expect the extent of the bounce. I mean, it would be normal to bounce off this level. It's even normal to come all the way up and complete the U in the SPX and come back to new highs, right? That wouldn't be terribly unusual. Especially since we kind of had a break and a crack of this more minor support level. I was pretty surprised at the speed at which we got here. So from here, normally what I would expect is for the market to back down a little bit, even if we were going to go higher. That would be normal operating procedure, typical chart patterns. I'm a little concerned with that because the NASDAQ has not come to old highs like the SPX did, nor did the Dow. In other words, we got some big bounces out of both of those. However, we didn't come up to our previous highs, which means I have one index pushing resistance levels. I have 2 other ones that aren't there yet, which could certainly push the SPX out into new high territory. And if we come back and we look at the Russell actually had a breakout of its previous resistance area, implying that the shorter-term traders are going to want to try and push this into around 12.15. So that being the case, I have a bit of a bias where we might get some sort of a negative reaction today off of the SPX, possibly. But you would think that the NASDAQ, the Dow, and the Russell are going to try and push higher. Basically, that's my thought. I think usually result in some sort of a grind higher. We'll see where it goes. That would be typical movement for December as well, by the way, is to grind higher. So let's take a look at our December trades, see how we made out, and go from there. So the first thing I'd like to take a look at is the December V Condor. If you look at this, as of Wednesday because the position hadn't changed from Monday. I was just planning on expiring this trade at whatever profit number this is. I think it's around $1,800. And from here, I had no problem doing that. But after Thursday's move, I just decided to go ahead and close this out. So, I didn't close it out, but I bought back on short strikes because we were up obviously 31 or 32 points or something on Wednesday. We went another 14 on Thursday towards the end of the day here. And if we look at where our short strikes were, if I come back to here, we were close enough that I just didn't want to expire this with the rate of speed the market was moving. One of the things coming into expiration or settlement over on Friday night, we've had times and we've had some very, very large moves between Thursday night and Friday morning. And usually when they happen, a lot of times when they happen, it's a kind of a situation like this where the market's is just kind of acting a little bit crazy, and then you get some sort of a big gap up in the morning. Like after a 50, 60-point move, I wasn't necessarily concerned about the following Friday afternoon being 30 points higher, but sometimes in the morning you get these weird exhaustion gaps, push the index really, really high. And I was actually concerned about that. I mean, we're getting close enough to this 1220 area. With the speed of the market combined with that, it just wasn't worth it. I mean, I had most of my money anyway. I just closed down the strikes here, and I just let this expire. I let the rest of it expire. And that pulled us out, if we go to the end of Friday, and we look at our reports, that put us at a profit of about 1536, which isn't a great month, but it's a little about $300 less than I was expecting. But I think it was worth closing it in that case. All right, so just a quick question here: should we consider special Christmas behavior, maybe flat position because of positive bias? There's always a risk of a whipsaw. It would be unusual, though. Like I said, I think any down move would be kind of muted, and they're probably going to buy it. Yeah, and there's another thing. Both October and November settlements had 15-point gaps up. I don't know if you know about this about settlement, but the biggest move ever, like people are always so afraid of the downside, especially on settlement, but the biggest move ever we've had on settlement was, I think, almost 40 points, and that was to the upside. That was not to the downside. We've never had anything close to that on the downside. So historically, the upside has more risk than the downside on expiration. It's kind of interesting fact of trivia there. All right, so let's just kind of move forward. We will take a look at our next trade, which is going to be the December ROCK position. This here, if we look out on Monday, I'm going to look on Monday morning actually. At 10 o'clock, because this is where we were last week. Let me switch accounts. The December ROCK position. This is what we looked like as of last week before the big move down on Monday. Now, one of the things when I get close to expiration, again, the market moving fast, and we had a support break. I was concerned with the market moving further down. I did actually do a rollback here. So if we come to the end of the day, we started out with 1130 shorts, and I didn't roll the long strikes. Right now, far from expiration, we're usually going to roll this whole wing back, but this close to expiration, there's really no benefit to doing that. I have 87 cents of time value here. I have 45 here. There's not a big benefit to roll that back. There's no point in taking on the extra risk. So, all we did is we took the 1030s, we rolled them back to 1110, and then we had our longs at 1180, and we brought those down to 1160, and we repositioned our shorts so that we were at 1150 and 1140. This obviously turned out to be probably not the optimal move, right? Because had we stayed put on Tuesday and Wednesday, we would have been better off. But when I rolled back, I did roll back into a positive delta configuration. I just kind of gave myself more room down here. And then nothing had to be done until Wednesday. If we pull to Wednesday, what I ended up doing is taking off 6 1150, 1160 verticals, and I did 2 1140, 1160 verticals. Basically closed off most of the position up in here, and I pulled off the call. So I did those 2 verticals, I pulled off the call, just put me in a position like this. This is what I do when I'm near expiration and I kind of give up, right? The market just started screaming the other way, and I could try to fight this, but really most of the time when you do this, you're much better off just to give up. And here, if I do this, I hold most of my profit. I give myself a chance to actually make a little bit more if the market does something I don't expect it to do and pulls back. I don't have to go through the execution of risk of closing the whole trade down. I can just kind of live in this position here. And, I really like doing this. I do this quite often. And I just kind of let the thing go. So obviously, this here is the way I expired the position. The profit and loss on something like this would have ran about 1896, and you would end up in this position here. So, I did lose a little bit more money because the market didn't pull back. I didn't make any other adjustments at all. And this position here came in at, if we go to Friday, yes, and I will show the T-log for that. If we go to Friday, it came out to 1896. So let's just do a T-log show for this thing. Not a ton of moves considering the amount of movement we had. Like I said, we had the rollback here on Monday. We had some adjustments on Wednesday, and of course they had the expiration on Friday morning. So that is that. You're very welcome for sharing that. So let's see. I just have a little bit of a question here. Where can I find performance for I'm going to show the results for the year on all these trades in just a minute, as soon as we go over what happened with the M3. And okay, that's all we have for questions. Great. So the M3, realistically, I would have treated the same way. In other words, when we sat down, well, if we come to Monday morning, we had essentially the same position on. It's slightly different, but very, very, very close. So if we come to Monday morning on the M3 trade, we had this position here, very similar to what I had with the ROCK trade. But with this one here, I wanted to just kind of throw in a little variety. I wanted to try and stay with the market. Right, because obviously we could have had two different outcomes here. You could have given up, or you could have tried to stay with it. And I decided to stay with this market move right into expiration with this. And one of the things is it took a lot of moves to do so because we had so much movement. So what I'm going to do with this trade is I'll show the T-log with it. I'll show you the final result with it, which wasn't as good as the ROCK trade because obviously making a fight when we have 30-plus point moves 2 days before expiration and another 15 on expiration is not going to yield you the best results. So the results aren't fantastic, but the movements, I think, are very educational on how to hold your T+0 or your profit level. Now, let me reword that. The movements show you very well how to basically handle an expiration move with an expiration cycle with very, very big moves right up into expiration day without losing your short. So what I'm going to do is I'm going on capital discussions tomorrow night at 4:30, and we're going to go over this trade here and probably maybe a couple other ones as well. But we're going to go over this trade here and how I manage this into expiration. Looking at the T-log, this had a lot of moves because we were up high. We started we started way down at 1080. I think we had to roll up. We had to roll back down. It was just kind of a crazy ride the whole way. If we come all the way to 15th here, and then we had a lot of moves on the 17th. We had a lot of moves on the 18th, right? So I'm going to go over this stuff on capital discussions. It's going to take probably 30 minutes or so to kind of go over this. So we'll go ahead and do that. So I think that'll be interesting. And I told them I'd meet with that. So staying inside the tent, regarding the M3, are there times when it's okay to be outside the tent, especially close to expiration? Yes. As a matter of fact, I spend a lot of times outside the tent close to expiration. So yeah, and I'm perfectly fine with the M3 outside the tent. Even close to expiration, as long as I'm controlling my Greeks okay. You'll see when we go over this position tomorrow night that this did spend some time outside the tent. So, and it's not the end of the world. This position can be managed quite nicely. Essentially, this position ended on Thursday, I think inside the tent a little bit. I'll just show you where we ended up. Right, so we ended up something like this. by the end of the day Thursday. We had the pullback, but obviously I had to close this. But it was very, very, very good. So very good educationally. And like I said, we'll go over that later. So V-Condor T-Log for December. Again, December was a fairly complicated trade for the V-Condor too, because we had a lot of price movement in there. But it was fine. I mean, we never really got drawn down that much. It just never turned out to be that good of a trade. All right, so here is that, and that is all of December positions closed. So if we take a look at what we got going on so far, or for the year. So we have the Bearish Butterfly strategy this year did very, very good. Big difference from last year. Of course, the market was a lot flatter and a lot more choppy, so it tends to like that kind of environment. This trade had one big loss for the year. It was in March, and it wasn't that big. It was like 23.4. Sometimes we pull 30% losses on this trade. That would be normal. We had 1, 2, I think 3 months near the high profit target, and the remainder of the months were near low profit target. Pulled out at like 146.2% of our planned capital for 11 wins, 1 loss for the year. That's better than average performance for this position. Like I said, last year it was 0, but that was the worst year I've ever had with the Bearish Butterfly. Was last year. The had as high as 240, 250%. You get some favorable years with good market cycles. You can do that. So this is a very, very powerful trade, especially if you time the market a little bit. In 2013, you could have done well with this trade, timing the market a little bit. But like I said, this was this year, no market timing, just by the guidelines within the program. The M3 trade, fantastic year actually for this particular trade. Again, much better than 2013. This did okay in 2013. Wasn't super, but like I said, 2013 was not your average year. It was the biggest up year we've ever had, and it was very aggressive, poor market cycles. But this year here, 5, 3, 10, 4, 11. I mean, these are pretty typical for M3 returns. Usually, you're going to have a couple losses throughout the year. And we'll bring that down in the 60% range. But this year was right on. And ROCK trade here, this is a fantastic performer in most markets. This did about normal returns this year. Usually you're going to win. I usually figure 9 wins, 3 losses with all of these. The thing with the ROCK trade this year is we didn't hit our high profit number very often. So we hit close to it here. In March, we did hit exactly the high profit target in November, a very easy month there. The rest of the year we've been kind of spent a lot of time in M3 configuration, which worked out fairly well and pulled about what we would expect here, about a 120. I think in 2013 that was over the 100 range as well. So fantastic there. V trade got a lot of suffering this year. We had 1, 2, 3 losses in the V trade. This one's kind of a break even, but we'll call it a loss. We had fairly typical gains, 10%. 3, those are a little low, but 5% is normal. 1.3 is low, 6% is normal. So still, 23.3, it's hard to find really anybody who beats that at a planned capital or portfolio level in most systems. So although it's less than expected, it's still a good year. But that pulls us for the year. If you look on an annual return for planned capital, combination of the trades, 94.5%, which is very good. And if you correct this for the amount in the account, in other words, I'm only using my planned capital, I'm only using half of what's in the account. So if you correct for that, you're running about 47.2. So excellent returns here. It's a very good year. So let's see. Am I going over the M3 adjustments in the capital discussions? Yes, I am through in the capital discussions. No, it's not through SMB. It's going to be, I don't know if you're on, it's Jim Riggio and Tom Nunemaker from, they went out and they started their own little community, which is a really great community, by the way. I think it's capital, if you look up capital discussions on the search engine, you'll find that. And you can just kind of sign in, and I'm scheduled to be on there Tuesday night. If for some reason that doesn't happen, because it is the holiday season, we will go over the M3 trade at some other point. But I would say a 99% chance that's going to happen, and that should be good. How do they compare to my live trades? I live trade very similar to the way I backtest. The results tend to be about the same. I don't necessarily do each of these trades in these manners every month live. In other words, I will have some sort of an M3 trade on just about every month. I don't have a real bearish butterfly on every month. I time that to market cycles a little bit. In other words, most of my money is going to be in an M21 trade where I'm going to analyze the market. I'm going to make a custom plan. Despite that, I do have a large amount of money in just an M3 trade. I sometimes have a disproportionately large amount of money in a bearish butterfly trade when the conditions are right. Sometimes I don't have any money in that trade at all. It's a very good opportunistic trade. Rock trade is basically I don't do a guidelines rock trade. I use an M21 procedure to trade my rock trade. In other words, I'm going to lean it or modify it to maximize my income, and that's actually where most of my money is. It's a rock style trade, and a rock style trade might be in an M3, it might be in a bearish butterfly, it might be in a rock position. That's all part of the trading system. So most of my money is in this, but it's really an M21 style of a rock trade. And V Condor I don't trade. There's not enough. There's not enough profits in it for me most of the time to trade that, but I have a lot of students a lot of people who just have a lot of money and they just don't really want to watch the market. It's very simple. It's very easy to do. Works in a lot of nice environments, so they trade that. And most of the ones who trade like a fee trade get similar results to what we have back trading here. It's so simple to follow. Let's see if I get. As far as previous years, they are on the website somewhere. You'd have to go back and look at them. I don't have time to organize them. If I have students that are willing to do that, then they can go ahead and do that, but I don't have that. I mean, 2013 was a good year in general, except for Bearish Butterfly. It was a very good year for V Condor. It was a very good year for the rock trade. It was a 20 to 30% return year for an M3. It was Bearish Butterfly was pretty much zeroed out because of the it was just too bullish for that trade that year. 2012, excellent year, similar results to what we have here, except better with the V Condor. 2011 was a good year in general also. So it was similar. But like I said, if you go back in the websites, they are. I mean, look at the December or January blogs, and you should be able to find them. Let's see. Yeah, these are simulated trades, Andy. They are based on planned capital. So they're based on a regularly margined account, not portfolio margin. So our margin never exceeds what's in the account. We have a planned capital number. In other words, we set aside a certain amount of money for the trades. We don't use actual capital in the trades. Usually actual capital is 95% of the time is less. Occasionally it'll pop up over, but most of the time it's less. Sometimes, a lot of times it's significantly less than what the planned capital is. Where do you sign up for the webinar? I do not have the link as of yet, Gary, but if you go on capital discussions, they should be sending out emails shortly. Okay. Oh, thank you, Ray. Yeah, he has. He posted the address and the questions, so hopefully you guys can see that. You have mentioned watching the Greek trends. Could I please explain a little bit? Unfortunately, I cannot explain that today, but yeah, if you ask me that again next week, then we can kind of talk about the Greek trends a little bit. We're just kind of tight on time because I have the results and I have the January trades we need to look at. What conditions do I look for with a bearish butterfly? Anytime I think I'm within 40 to 60 points of a top is a decent time. It's definitely within 40 points of a top is usually a good time to put that on of a market cycle. And which strategy do I expect to do well next year? I would expect them all to do well next year, with the only exception if the market gets extremely choppy, the V condor might not. In other words, we are due for a very, very significant retracement in the markets, and they do look like they're kind of topping out a little bit. Usually you see this increased volatility that we've seen in the Russell, where we're getting these really large price moves. I think the January V condor is going to do fine. I would be concerned about if the market's really volatile, you might want to stay out of a V condor. Do I need to copy and repost it? Oh, okay. All right. Yeah, Ray's saying I have to copy and post the comment that he made, otherwise people can't see it. So let me see if I can do this. This is the capital discussions. Well, actually, I can't even copy it, Ray. I don't think. Oh, there it is. Okay. Let me send this to everybody. That should be the capital discussions link that we have there. Well, okay, let's see. If I have multiple trades on, how do I keep from running over each other? I have separate accounts. If you have people who trade this stuff in all the accounts, and what you do is you keep your M3 and Bearish Butterfly basically on the same strikes. So it's just a exercise of being careful in where you place them. So if you have a 12, 1120, 1140 Bearish Butterfly, you can place your M3 trade at 1140, or you can place it at 1120, avoid the 1130. And you can do stuff like that to avoid walking on strikes and stuff. And it's even not a big deal, really, if you do walk on strikes, but they do that. I like to hold separate accounts. What time's it should be 4:30 Eastern at Capital Discussions. And I did put the link in there, so hopefully you guys can see it. Am I forecasting a big drop in the market? I would think that big drop. Define big drop. I mean, we're going to be due for a normal correction in the Russell. Well, the Russell's already had a normal correction, but if you look at the SPX or the index, which has failed. All right, so if you look at these here on a more longer chart, I mean, this is due to make some sort of a normal correction, probably down to the 1700 level, which is a fairly big drop. When's it going to happen? I don't know. If we do our M21 analysis, it looks like we still have higher to go in the indices longer term before we hit our absolute turnaround. Like, for example, the turnaround on the Russell is 1350. So I would expect to get a breakout from this range at some point this year, probably pull the 1350, and then once you go to 1350, we're in kind of like market crash territory. If that were to happen, I would be very concerned with a very major market retracement. Right now, I think we just are kind of due for a normal one, a little bit of sideways moves. Do I know if the webinar on Capital Discussions, they're recorded and posted on their sites, and I'm going to make an effort to get it posted on my site also. So that should be kind of fun. All right, so January trades. So we have a January Bearish Butterfly, which actually had no adjustments. So if we just take a look at where we are now, it is drawn down, but we haven't quite hit an add point yet. So if we take a look at our analyzed graph, I'll go to January Bearish Butterfly. Right, this trade was doing really well, obviously, back here at the 1146 area. In reality, if I'm trading this thing, right, I'm looking at my charts, and I'm down here somewhere, and my position's up like $5,000. And particularly since we had what we call a snapping crack, we broke our support level this day here on Wednesday. During the day when it was clear we were breaking back into this range, and we were probably almost definitely going back up to the 1190. At that point, I would have converted this. If I'm doing like an M21 style trade, I would have converted this over to an M3. I would have been able to hold most of the profits here. Probably been up $3,000 or $4,000 plus in the trade. But, like I said, we're just following guidelines here, and I'm just going to hold this position. We're going to follow it, and there's a good chance the trade's going to turn out fine. But we are drawing down a little bit right now. But that's what we have. If the market continues up, we'll start scaling into this thing. Then we have the January M3, which did get adjustments, and the reason it got so many adjustments is because we did roll it back. So if we look at this on Monday morning, ended up being, I don't know if that updated or not. I did lose. Okay, go to Bearish Butterfly. Let's go to M3. If we go here, we're sitting in 11 butterflies. Later in the day, Monday, the move was put us down under the 1150 level, so we're clearly under our short strikes near the close. So I ended up rolling this back. So when I rolled it back, I reduced my size down. And I reduced my size down because if I kept the same size, I would be negative delta. I don't want to roll back and go from positive delta to negative delta. So I just rolled back. I reduced to 1110. I reduced my size down to 10 contracts. I added 3 verticals in here to bring myself just slightly positive delta and went into a position like this. And going forward on Thursday, we didn't do anything until Thursday. So if we go to Thursday, in other words, I'll show you Wednesday. We had a 31-point up move. I could have arguably tried to move this today. It wouldn't have been a terrible thing, and we're kind of a borderline situation here. Usually in this situation, like I said, in general, slower is better, or being a little bit slow on the adjustment. So I held it. We went into Thursday. Of course, we had the larger market up move. And this put us here at into this position. So I rolled up all the way from 1110 to 1140. I put my long strike, well, I have 100 points between my long strikes, but I put my short strikes, some of my short strikes up here at 1160 to get our delta and stuff balanced off. And this is what we looked like on, and I never moved the call. So this is what we looked like on the end of the day Thursday. I think Friday I didn't do anything. So moving on to Friday. And this is where we look at the end of the week, pretty much a break-even type of scenario here. So I actually really like this position. If the market does what I think it's going to do and it kind of backs down into here, that would be nice. If we start shooting over 1218, 1220, I'm going to have to move this up again. But I just don't think we're going that much higher than that. So again, good to be a little bit slow with my adjustments. I can shoot up to 1215. I might allow it to sit there for a day, maybe 2 days. Maybe put some verticals in here just to kind of stabilize my T+0 line. If I have to, I'll roll up. But that's the position there. T-log is going to be here. That's what we have so far. Again, everything's done pretty much end of day. I did some. This was pretty much the end of the day too, but I actually did this live to a position, so I put in live prices. That was very similar to this. But the rest of the stuff is simulated. And let's see here. I got some questions, maybe. Do I see a problem with using weekly expirations 56 days out? I have some clients who've done that before. They haven't had any problems with it. It hasn't been with huge size. So I don't necessarily see a problem with it. I do know that weeklies do react a little bit differently, particularly coming into expiration than the monthlies do. I haven't heard of any trouble getting execution on it, but I suppose if you have a really large size, you might have some issues with that, because I know they're a lot more thinly traded, especially if they're far from expiration. So, I mean, you can give it a shot with a small position, see how you do. And I mean, let me know. I mean, I'd love feedback on it. There's really no need to do it, but hey, can you do it? Sure. And let's see, the last thing. Oh yeah, January V Condor. I don't believe had any adjustments here. Oh yeah, we did. On the 15th, we bought a put. Right, so we had the down move. We hit our maximum delta. I bought back one of my 1090 puts. So that's why I have 14 here. If we just go to the end of the Friday, we went from having a problem to the downside to being a little bit stressed on the upside, but we are certainly within limits here, and everything's looking good in the Jan V Condor. I like this trade when I entered it, and I still like it. And last but not least, I did enter a ROCK trade, and I think this was actually adjusted on Friday. Yeah, it was. So let me show you the entry. I actually did this on Wednesday, but I entered this on Wednesday. I did butterflies at 1140. I did two 1140, 1150 verticals, ended up in this position here on entry, and on Friday I ended up doing a couple more verticals in here just to, I think I had a Vega issue. I went positive Vega. So I just did some more verticals in here just to bring myself neutral Vega. And this is the position that we're sitting in the ROCK trade. And again, this is drawn down a little bit, but nothing to be concerned about, just perfectly normal. So that's all we have for the trades. Let me just quickly look at some questions here. Today's session will be recorded, and go to my blog at lockeinyoursuccess.com, check on the blog, and I have meetings here for years, I think back as far as 2008. What is large? I would just start with a $5,000 position, see how stuff is, bump to maybe a 25,000, see how it goes, and then before I get up to anything in the $50,000 range. I rolled my M350 points. Was that too much? Middle strike 1180. I don't usually roll them that high. I like to hang behind the market a little bit more. I like to have my long strike maybe 10 points over the market price. So it gives myself a little more room. So is 1180 too close at 1198? I mean, probably a little bit. I wouldn't have done that, but time will tell how that works out. I don't have a problem with an 1180 butterfly, by the way, necessarily. That's because the market's probably fairly stable. Your risk going that high is two things: the market going extremely higher, which I don't think is going to happen, and the market really kind of coming down really hard, which I still don't think is going to happen. But that's more probable than going up much more than 12.15. So if the market stabilizes and does the normal December thing, you're going to be in really good shape. If we have something unusual to the downside, you're taking on a little bit more risk than I probably would. But it's not the end of the world. I mean, we can kind of wait it out and see what happens. And that is all I have. Thank you very much, everybody. And try and catch me Tuesday night if you can on Capital Discussions. And have a great Christmas if you celebrate Christmas, or if not, just have a really good time this week, and we'll talk next week. Thanks, and bye.